We are headed into uncharted territory. There will be bumps along the way. You came here for the truth. We're going to look at some big issues today. I'm going to focus on these big topics and I'm going to give you the details within them. The first thing is shipping. The prices have gone berserk. I'm going to give you the details around it. The second thing is lockdowns. Guess what? We could be expecting more. If you're in Australia, if you're in China, you're seeing this already. Could it be making its way around? Number three, we're going to look at the bubbles that are apparent and so very apparent today. There's no doubt about it. A lot to discuss. Let's go. Let's talk about the container shipping rates. You could see on this chart here, they have gone berserk. It is unbelievable, but just take a look. Now, it depends on which one, of course, depending where it's going to and from. But you could see in general that the index has moved up considerably. Okay. And just taking for this example right here, Shanghai to LA or LA to Shanghai. And, these are all in the top. This is the most popular route you're going to find. And of course, that's usually a great indicator to look at. Now, they have gone to places we've never seen before, and it is coming from the people in the industry itself. This is the details. You can look at the indicators, but the actual people that are focused directly on this are saying that something has gone wild. And in fact, there's a lot of questions at this point. And in fact, what I have done is set up a live interview for you tonight, as you watch this video, tonight's Money GPS Live that will be posted at 9 p.m. Eastern Time, 6 p.m. Pacific Time. And we're going to talk to somebody from the industry who's going to give us some insight. Stay tuned for that, because I don't just bring you the charts and the articles. I bring it to you directly from the horse's mouth. So stay tuned. Look at this. Container inflation not contained. And you can see the FBX, Global Container Index, that's the red line right there, going off the charts. On the right-hand side, especially on the China to US West Coast route, which is what we talked about when you look at Shanghai to LA. It's gone unbelievable. And of course, you've got all these different ports that are seeing a lot of congestion. They're not able to move that product through. As a result, there are delays in getting your products. And that means, of course, higher prices, just the way it is. Now, that could be short-lived, but here we go. More lockdowns, more restrictions, and so on. And that, of course, is going to bring in a new level of concern. This is an article talking about, the Bloomberg article talking about what's happening in China and how traffic has thinned on some of China's typically busy city roads. In fact, congestion in Beijing was down 30% from a week earlier. 30%. So you can see what's going on here as more people are most likely being forced to stay at home. Certain businesses are closed and this and that. These restrictions, just like we saw towards the beginning of 2020, it was affecting the restaurants. And you saw the road congestion was declining and so many different things. And that puts a real dent into so many businesses. And of course, that affects the economy too. Joe Manchin is, quote, deeply concerned about the Fed's easy money policy, urges Powell to taper. That's right. Quote, I am increasingly alarmed that the Fed continues to inject record amounts of stimulus into our economy. Of course. Why are they doing this? We know that, you and I know it, but even some people are starting to speak up against it. And it's about time, because you shouldn't be doing this. And now we get a little bit of insight here as to, they're talking about the taper and so on. September, we may get an official statement coming from the Federal Reserve that may suggest end of the year, they may do that and so on, which they can, of course, walk back depending on what happens with the current situation, if you know what I mean. Moving on, all right. Howard Marks really, says a lot of intelligent things, and right now he's talking about the everything bubble. You've heard it all before, And he makes the same claims, saying, why are we going through all of this? Why are we creating bubbles here? Prices are absurd. He also mentions the fact that while the stock market has accelerated to a point at which you would say that, it's kind of toppy, at least for this period, maybe it can go sideways and it's not justifiable to go higher just because they've pulled so much growth from the future. But what about the economy? It's still at ground zero. It's still kind of in the recovery phase, struggling. And these two things, this disparity here, just doesn't really sit well, at least as it relates to him. Now, this company here is just one of many that are doing the same thing. Crocs, you know them, maybe you wear them, hits junk bond market to fund stock buybacks. Think about that. They get cheap money, they borrow at cheap dollars, and then they fund their own stock buybacks. Why? To push the price of their stock up. To push the price of their stock up, their executives get to cash out, loving it, showering themselves with free-fed money. And this is what we can see today. And to be honest, I've seen it so many times before. It's not the only case. And right here, it just shows you companies have been selling debt at a rampant pace this year, capitalizing on cheap debt to fund everything from dividend payouts, acquisitions, leverage buyouts to replace more expensive borrowings taken on earlier. So the cost is cheap. Why not take advantage? Number one, stocks are in a late stage right now, and as it relates to everything we've seen, but the economy is still rebuilding. That incongruency or inconsistency is not normal. Number two, the Fed's actual policies are inconsistent with the data that's coming through. You're seeing the unemployment rate that they're putting out, the jobs numbers they're putting out, and yet they're printing to the moon. Number three, look, you got to be honest. If you see inflation happening here, you must acknowledge it, and your portfolio should be adjusted to include safer bets. There's always risk with any investment or any asset, but certainly now is the time to always be watching, adjusting accordingly. This article here is talking about something that, I've seen it so many times over the last few weeks. BlackRock and Wells Fargo delay return to the office. There are tech companies, I was just reading, I got the screen up on my side over here. If I could find it, there was another company, one of the big tech companies or two of the big tech companies that are delaying the return back to work. Oh, it's just going to be another month. Oh, it's just going to be 2 months and so on. Who knows? Really, 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 who knows at this point? This article here is talking about inflationary pressures. People are panicking about a potential pork crisis in California. In this particular case here, they're talking about a law that's going to be changed that's going to increase the prices, whether that's coming from the Federal Reserve or shortages, supply chain problems, and so on. What matters to me is what's going on with you. And that is the prices that you have to pay of whatever it is, okay? This one was just talking about pork, but maybe it's your coffee, maybe it's your, anything, your gasoline and so on. Look at this. You can look at the U3 unemployment rate, and we're going to talk about the job situation in a second, so it might be hard for you to see on your screen, but the line that I just highlighted is the U3 unemployment rate, okay? And showing right now today 5.9%. All right, 5.9%, great. That's as of June 2021. But you look at this one down here, that is the U6 unemployment rate. By the way, these come directly from the source, the BLS.gov. I'm bringing you always, if you're new to the channel, always directly from the source. Everything is sourced in the description as well if you want to take a look. But you can see right here the U6 unemployment rate. Again, that's an official stat, 9.8%. People who are underemployed. So people that work 1 hour per month are employed. Are they really? Well, technically, but whatever. And this comes from shadowstats.com. You could see the U3, that's the red line, the U6, that's the gray line. But look at the blue line. This gets an even a more broad look at what's going on with unemployment, and it is at 26%. I don't know. I don't know what the real number is, but I know that a lot of people are underemployed. They had their salaries cut. They say, hey, you want to stay on the job? No problem at all. Look, we had some turbulence over the last year. We're going to keep you on, all right? We're just going to give you 20% pay cut. How does that sound? No? All right, go find a job. Go try to find a job. Dime a dozen. You're a dime a dozen. You want to stay on? Sure, no problem. 20% pay cut. Are they going to get a pay increase? Did they get one at the end of or the beginning of 2021, end of 2020? Maybe. A lot of people didn't, though. Depends on the industry, certainly. Now, you could take a look at how the retail traders are responding to all of the information that comes through, and just take a look. Estimated retail flow into US equities and ETFs by month. This right now, today, as it stands, there has been more money coming from the retail traders than we have ever seen in history before. That is generally a very bad sign, but who knows? Stocks rise as jobless claims drop. Do you think that the two are correlated? Well, they should be, but of course, it doesn't matter. Look, you can see the chart right there if you're interested. What concerns me, of course, is the U.S. trade deficit widened to a record in June, showing strong demand at this time right now. Who knows what's going on, of course, because look how it just keeps getting worse and worse and worse and worse. But some people, they're doing better than ever before. I mean, you could see right now Virgin Galactic increasing their ticket sale price to $450,000. So it was $250,000. And now $450,000. That's some inflation right there, I'll tell you. And then last but not least, just wanted to show you that Venezuela to slash 6 zeros from its currency. Now, I could have sworn it was 5 zeros before, and I actually could have sworn that they've done this already. But the only reason this is being done doesn't help inflation at all. It just makes it easier for them to use less bills. It causes chaos generally, because what happened? Okay, well, I bought that yesterday. If I know that's coming, am I going to start buying today? Businesses are all messed up. I mean, the currency basically has no value at this point. They're just trying to avoid somebody capitalizing off the wheelbarrow sales. I mean, it's crazy, but this is what could happen to a currency when it happens faster than you think. It doesn't have to go to 50%, 100%, 1,000,000%. If it just gets really heavy, it starts to disrupt everything. If you're not already part of the insiders, you want to be, because that's my way to get to you directly. Look, let's be honest, the channel is shadow banned. The only way around this is if you come directly to me and I can go directly to you. And this is the way that we can be sure that I get my information to you. I'm doing everything I can to readjust this algorithm, but I need your help, and this is one way to do it. Sign up here for free, of course, at themoneygps.com. The card is up here. Just go to themoneygps.com directly. If you want to help me out, hit that algorithm button, the like button, and that will support this channel. I do appreciate that. And if you haven't seen this video already, you definitely want to check it out. Click it, and I'll see you there.